Hello traders, hello everyone, welcome to our new webinar. It's Monday, November 25th, so I hope that everyone had a wonderful weekend and that you're ready to dig into the markets for this week. So just let me confirm if everything is fine, if you can hear my voice well. Can you see my screen? You can either chat, let us know this in our YouTube channel here in our chat box, or maybe somewhere else, because we are multi-stream this also to other platforms like Facebook, Twitter, and so on. So looks like that we are ready to go. By the way, I saw some ideas that maybe our charts, my analysis should be a bit wider because on the trading view, so that you can see them better. So if I will have this tab on the right side of the screen when I will do the updates in the trading view, please just let me know, and I will try to make the chart bigger so that you will be able to see it fine. So Elena is here, Anas is here, Tilam is here. Hope I read this correctly. So hello guys. Now, as you know, everything is still like a Trump trade. This euphoria is still going on. We are seeing stocks making some nice rebound, but it's not only that. We have also Powell, who somehow said that there could be on pause with the rates, and I mean, not maybe on pause, but maybe there will not be that a lot of cuts like firstly thought. So if we're looking here at Fed rates expectations, we can clearly see that these expectations for another cut are slowly dropping. We are still above 50%, but I would not be surprised that we are going back to this below 50%. So it means that there would be even more bullish sentiment, maybe for the US dollar. Now, if we take a look, maybe on this and just give you a recap what we are looking for and what we were expecting, talking about last week, is that we saw US dollar index in recovery mode, right? And this recovery is now since mid of 2023. We said that most likely we are headed up to 108, okay? But up there we should be very careful, especially if we consider that the Elliott wave pattern is clearly bearish, okay? So for 2025, we know what we should be aware of, especially when it comes to the US dollar, because a lot of things right now is happening based on ideas, okay, based on just on optimism, not the real facts, okay? So who knows if Trump will deliver everything what he's promised or he's talking about. The reality can be completely different. So all of these moves that are happening right now, keep in mind that they can be reversed, including cryptos, okay? Because every market moves in cycles. So now when it comes to US dollar, I still think that this 108 is a pretty strong universal zone. Also, in 2016, we have seen a very similar reversal to the downside when Trump related move was firstly caused US dollar to rise, but then we have seen a reversal to the downside. So this is still our map. I talked about this this last time. And if you look here, now what happened since then, obviously we are still trading here above this trend line resistance, but notice that we already tested this resistance here from firstly took out resistance from October 2023, then even spiked into these levels from November of 2022 here around to 108, and now we are turning slightly to the downside. Now if you look here at this 4-hour time frame, I still think that maybe that's not fully accomplished uptrend, okay? Because if we think that's a wave C, then wave C should be structured by 5 waves. But for now, that's not really the case, right? So that can be an extended wave 1. You had a wave 2, 5 subwaves for a wave 3, and now you are in a wave 4. And if you look closely, you will actually see that we have some still unfilled gaps at the highs here. So these gaps occurred after Trump announced some new US Treasury Secretary. But again, these are just speculations that there will be some improvement, something better, that policy will changes, and this is what drives the markets, the expectations. Okay, but this such news will quickly be forgotten, and there can be new flows around the corner, and obviously such news may not necessarily define a new trend. So with that being said, I still assume that this dollar index is now just pulling back temporary, and this gap firstly is yet to be filled, and then another we see maybe final push to the upside. So I see US dollar moving into the resistance. We were looking for this fifth wave to the upside. As you know, last week we talked that we are seeing just in a temporary correction here. Same with the euro dollar to the downside, that will go in a second, and we got a very nice push to the upside here. But now, since wave C should be structured by 5 subwaves, well, we are now seeing prices here in a wave 4 retracement, right? So what is the ideal support? Well, it can be here around 106.50. It's the area of a previous fourth wave. It's the 38.2%. Also, if you will compare distance of wave 2 to wave 4, you will get same idea here, that that's the potential super zone. And if we consider that we have this unfilled gap here, okay, slightly higher, then definitely I just think that this Monday flows that are happening right now can be retraced. Also, don't forget, we had Thanksgiving in the US at the end of this week. Thursday, Friday could be very slow trading sessions. Okay, so during these periods, of course, flows can change. Okay, because you will have an extended weekend in front of it. So it means that some market participants want to be completely free out of the market, and that's what may try to define some reversals on the markets as well. So for now, I still think that this dollar has one more push to the upside. But as I said, we are coming into these very late stages of the dollar recovery. So I just think that maybe this Trump-related trade can come to an end in December. Ideally, after this, another push to the upside. So maybe if we will have some good price action here that would confirm us that we are in a wave 4, then I think that there can be still opportunity maybe to catch some upside here, especially if we look at some if you look to trade US dollar versus some currencies that are very weak, okay, like pound, for example, euro. These definitely are not looking good. Even kiwi is not looking that good because of rate expectations. They are expecting to cut rates this weekend. This can also keep kiwi in this downtrend. So overall, this Elliott wave pattern suggests maybe slightly more upside, but it's not always maybe easy to put all of these pieces of the puzzle together to really get this completed wave structures. Okay, that's why sometimes we also have to keep an eye on levels. So if suddenly, let's say that I'm wrong and we don't get this one more push to the upside to 108.50 or so, then what on the downside should matter is 104.65. If this level is overlapped, then that would be a serious indication that dollar index is already topped, and that all of other related correlated currency pairs, obviously dollar pairs in particular, will follow the same pattern. Okay, so overall, we think that sooner or later dollar will hit resistance, but maybe we are not there yet. Here's also euro dollar. Now, we said that euro dollar is also most likely headed to the downside. We were looking for a break below this wave A supports. Now, again, if you are not familiar with the Elliott wave principle, we talked about this last time. That's probably the most basic wave structure, Elliott wave pattern, that you should remember. You have 5 waves up in one direction, then you have a pause in counter-trend movement. And normally you will see a lot of optimism where? In a 5th wave, right? And then market does what? Does the opposite reaction. Where you will see a lot of pessimism? Well, here at this point, before the market started to move to the upside, or at the end of this point when you have an ABC drop. At the end of wave C, there will be a lot of pessimism. A lot of markets, speculators, investors will try to call for more weakness here on this market, but that's exactly the point where pessimism can again turn around and come to an end, and that's when optimism hit the market. So I just think that we are seeing stories, especially since end last week that there are a lot of speculations that euro is going back to parity, even back to these 2022 lows, which certainly is possible. But whenever you see markets hit you with those stories, just keep in mind that maybe we are in a very late stages of this trend. Okay, everyone, like with Bitcoin, everyone was concerned we will see 100,000 or no when we were trading through the summer range around 50,000. But now when we are at 100,000, now you see a lot of optimism, a lot of good news coming out of the market right at this stage. Okay, so you really have to be aware that all of this good news will come very good news will come at the end of the bull run. Okay, very bad news in very strong downtrend. So I think that actually we could be looking and potentially trying to stabilize here on the euro around to 1.02. I'm looking this level. It's also the 61.8%. Also, you have the ECB that are still cutting rates, right? And they're looking to cut even further to support the economy in Europe. But then you have, on the other hand, you have global inflation that is still a big issue. We have each week we have new inflation data from one country where numbers shows that an increase. Okay, so even at some point ECB will most likely stop with their dovish policy. Okay, they could be a bit more concerned, especially if the euro at the same time will keep falling, because if you have euro dollar coming significantly to the downside, that's definitely not good for the inflation. You cannot fight inflation if you have a very weak currency, right? So I just think that maybe all of these pieces, when they will come together, will eventually stabilize the euro. Okay, one chart that I want to look at as well is the COT data. I don't think that that's the latest data from this weekend from Friday, but if you will take a look, maybe here, by the way, it's on a bar chart, so you can look at COT data. It shows the positioning from large speculators and smaller speculators as well, and gives you a very good sense of in which cycle of this pattern or of this trend we are currently positioned. And I will look at now obviously at large speculators, because these are the most important ones. And if you will take a look here, you can see that here, okay, we were at the extremes here. There were a lot of shorts going on back in 2022, and then what happened? Market moved to the upside. Well, you have euro dollar now down here testing the same levels, right? So we have a very similar positioning here based on sentiment, based on positions from these large institutions, and meaning that we could really be in really late stages. So I think that that's a pretty interesting, very potential strong support that could show up in the next few weeks. So I think that we should be aware of this potential new bounce to the upside. I just think that we have also very nice and very beautiful Elliott wave pattern that suggests the same thing. So I just think that that's a very important data that we should track, and the price action as well. But maybe on the euro dollar, we will get this one more push to the downside to complete this whole 5-wave drop within wave C. But it's obviously the same story like I said with dollar index, that if we suddenly see more dollar weakness and the euro dollar at the same time moves above 107.65, this will be a very huge level. Okay, it will tell us, okay, it would be an early signal indication that ABC correction is coming to an end. In such case, we could see more strength. But for now, the trend is still down until it's not, right? This gap still not filled being completely. So I think that there is actually a chance that we will see some back and forth moves, maybe even some consolidation because of the holidays in the US. And then you see another final push to the downside in December before market tries to print out a new low, and then maybe even will stabilize. Now, when it comes to potential trade setups, definitely if you're looking for shorts, 107.64 is then your invalidation level. We were looking for shorts and we were shorting euro with our members last week when we identified this wave 4 went out on Friday, and now I will definitely keep a very close eye once again on these developments here in the next few days. Now, if we take a look also on cable cable came to the downside very nicely. We were also on track with this one for the last few weeks, and more importantly, we have now 5 weeks or so. Okay, but what is important, at least for me right now, okay, is that here we have these 5 waves down. Okay, and these 5 waves down from that start of November actually suggests that we are completing this cycle, and that at least temporary free wave rise should unfold. Okay, so definitely the easy part for potential trades on the short side, or for potential easy analysis, okay, it's definitely not the best wave structure, okay, because you clearly see this completion of a 5 waves down. So I'm not sure if that's maybe even completed wave C and we will turn impulsively back to the upside, or maybe we will get some kind of a consolidation and then further weakness. But what is important at this stage is also this trend line. Notice that we have some extended triangle trend line right here at 1.25, so certainly this one also matters. If we'll see some serious recovery in the next few weeks, then maybe even some kind of a very big running triangle could be happening here as well. But if this one is broken, then get ready for more impulsive weakness here. Now also regarding let me check my notes here. Regarding Aussie, we have the inflation data. Okay, this week the expectations are 2.5, up from 2.1, so you can see once again inflation is pointing higher, but RBI was on hold. Okay, there were one of a few banks that didn't cut too much, so I still think that this data should be very important, but not only for Aussie, maybe even for Aussie versus Kiwi, because we have also rate decision from New Zealand that is expected to cut from 4.75 to 4.25. Okay, so this will be quite interesting to see how Aussie versus Kiwi will be trading. Okay, what I see right now here is that maybe there is a potential for more weakness on Aussie dollar, maybe to retest this lower side of this contracting range. At the same time, keep in mind that New Zealand dollar has been mostly weak, and weak has been exactly on these expectations regarding rates from New Zealand. And if you look now here, if they really maybe make some decisions, still markets could be reversed by the rumors, sell the news impact. Okay, so I'm looking at Aussie versus Kiwi here, and looks like that we made a very interesting new swing high here. We retested the upper side of diagonal triangle here, could be even potential wedge formation. Okay, that suggests that we should see a reversal. Maybe if some just maybe limited downside, still we should see some reversal in my opinion. And also if you look closely here at the substructures of this wave 5, it's also 3 waves to the upside. It means that in ending diagonal, each leg should be subdivided by 3 waves, and so far this can be counted even as a wave A. You have a wave B triangle, maybe the final thrust higher here is coming. So after CPI data from Australia, after New Zealand bank rate decision, I think that this pair will be very volatile, and potentially we can see some very strong and serious reversals. And if we'll get impulsive drop back to 1.1, I just think that there can be even more weakness going forward, and I will have a very close eye on this one. Also, if we look at some other markets that we covered last time, I don't have it opened here. We talked about yen crosses, if you recall. Now, here is euro yen. We said that the euro yen it looks like that it's forming some very nice bearish pattern. You have left shoulder, very strong, very big head, and then a very strong drop and a right shoulder that came back to this very similar resistance from 2023. And more importantly, this drop has been a very strong one, impulsive. You have this rise that looks like a counter trend movement because it's in three waves, A, B, C, and we came very closely to the 61.8% and now trying to roll over here. So we were looking for potential more weakness. We said that 165 could be a very interesting, important resistance. We came 30 pips away from that level before market sold off. Now the question is, what will be the key driver for potential Japanese yen strength? Okay, keep in mind that Bank of Japan, there's some new speculations that they will hike rates once again. Okay, and this could make Japanese yen very attractive. And obviously they are not satisfied with FX levels, especially when they are looking at dollar yen very strong rebound. Okay, so it will not help with them with the inflation either. So certainly Japanese yen could see some more strength, in my opinion. Maybe Japanese yen will come to the upside as a safe haven if really stocks would turn around in the next, let's say in the next few weeks, few months. If stock market would come to the downside, euro yen, pound yen, all of those similar pairs will also experience weakness. Now here's also, before we go further, here's also pound yen, very nice free wave rise back into this channel resistance. So I think that's a wave B, and I think that there should be a more weakness. Definitely it's the Elliott wave pattern that I would always label on this kind of a price action. Okay, of course Elliott waves is always a game between possibilities and probabilities. Nothing is 100% certain, but definitely that's the wave structure that you should be aware of, and this kind of a Elliott wave map could help you to define in which direction you should be looking for potential trade setups. Now, looking at stocks, as I said, correlation is very important with yen pairs. So here you can see that we had a very similar drop back in July and in the start of August, and then S&P 500 here you can see that bottomed and is now keeps moving to the upside, right? And we are also seeing at the same time recovery on yen crosses, but it's not that strong and aggressive. So I think that whenever we are ready to finally to complete this wave 5 here on the S&P, on US stock markets, and we'll see maybe just temporary pullback for a new wave 4, well, that's when also those yen crosses will also roll over. Now here we are still seeing potential wedge forming, maybe even we'll see another push and strong leg towards 6,200. It's not only the S&P 500 that is now back at the highs. We have even German DAX that is testing again this channel resistance. So it will be interesting to see if we can break this trend line. Then I think that new highs will come here. But keep in mind that on the S&P 500, okay, we also have some gap here on the downside. So maybe even if we come to the downside back for this wave C, some irregular formation, something could still be happening here. But the very strong potential support, the key support I should say, would be at 5,840 is the lower trend line of this channel that we are currently trading. Now alternatively, it's also possible to view this recovery if we see push to new highs as well here. It's also valid to look at this as an ending diagonal, or if you want just a wedge formation. Even this one suggests that there can be limited gains, but certainly you don't want to see a push above 6,170 in such case, because then wave 5 would be longer than wave 3 and this wave count would be invalid then. Okay, now let's take a look also on some of other markets here. I will take a look on some of stocks. Here is AMD, also still consolidating. We said that most likely that's a triangle, a running one, which could see more weakness, but what really matters the most is this unfilled gap. So maybe we get a bit of more gains here for wave E to finally complete this ABCDE triangle, because triangles are structured by these 5 subwaves. So I think if we rally into this 160 area, that should be very, very interesting and very important potential new swing resistance zone. Okay, so I just don't see this pattern as bullish. I mean, if we have to predict what will happen in the first part of 2025, definitely assume that this consolidation could last and even bring prices lower later on after this wave B is finished. Also, if we will look at this one, Google, this one is also had some very interesting reversal. As you know, we have been tracking minimum 3-wave rise back to these unfilled gaps. So you can see once more has proved that those gaps are very important, especially those that occurs during earnings. Okay, so what we are seeing, broken channels. So we either see an impulsive drop for a wave C, or maybe just move sideways for some kind of a triangle, but definitely it's not the completed correction. So I think that there is a risk that we will even continue further to the downside. As you know, there were also reports last week that Warren Buffett is in cash, that he sold a lot of his assets and obviously stocks, and it means that he's just not seeing very good levels or opportunities on the markets, especially in the US markets at these levels, and he's just waiting on opportunities. And not sure if this will also cause some other retail traders to do the same, but definitely it's not the best place to look for potential, let's say, longer term trend setups here on the stock markets in general. Now, if you look also maybe on Microsoft, well, Microsoft still trapped in this consolidation. Also, I think it's a triangle, but can be in a higher degree wave 4, which can be a bit deeper. I think that 360 still potential, very good and interesting level. So for now, watch out for potential more weakness after this wave B is finished. Now looking at nvidia, as you know, we got these earnings last week. Obviously data was not that strong like maybe some would hoped, so there was a limited upside. But it's not the first time that stock actually came to the downside despite very good data. It was also the case here back in August, okay, when we also had some similar reversal later on. So I'm just wondering if maybe this current bull run is coming into very late stages. Keep in mind that we are still either out of a triangle, or if we just will keep chopping here, maybe even some wedge formation could still unfold as well. So what I would say here, that you should keep an eye on this 131, 130 support. Okay, as long as we are above that, it's still chance that this uptrend will resume. But if this support is broken, at the same time you see a broken this key trend line extension out of a triangle, then I think that we are unfortunately going to see a new deeper correction. Okay, now obviously there are will be some exemptions and some stocks that are still showing some very interesting price action. Here we have one on McDonald's. You have potentially very nice and extended third leg to the upside. You have, more importantly, this unfilled gap here near the highs, right? And we said that those gaps are very important because firstly, when they are opened, the price could retrace back to this gap and see it like a magnet. But then once they are filled, market could, because flows will change, market can again change the trend. And now what we are seeing here is this unfilled gap higher, but market came very close to this gap from August 19. So I think that that's actually a very beautiful, very nice potential support, and there is a chance that we will see a new rebound here on this one. Also, we covered PayPal as well last time. We said that we are seeing some bottom formation here with an ending diagonal and also the head and shoulders pattern as well. If we project this target from a head and shoulders pattern, then you can see that we came out with levels around 100, close to 100, which is also the swing area here from from 2 years back. So definitely that's a pretty nice, interesting level here. Since I have it here, let's take a look also on Tesla. So what we talked about Tesla last time, that we are most likely moving out of a very big triangle, and that we then should track impulsive sequence. And we identified some very nice pullback here into wave 4 that came down to the 38.2%. It was a very beautiful intraday setback that now causes some more upside. So I think that Tesla is doing pretty well and could definitely extend even above 400. On the downside, you should be watching for 270. If this one is broken at any given time, I just think that Tesla then will either stay sideways or even look bearish. Now let's take a look also, just because someone also asked, let's take a look also on gold. What is happening there? Someone is asking if I covered Nasdaq. No, I didn't cover Nasdaq because sorry, I will be running out of time for this Nasdaq. Okay, but we covered the S&P 500. Okay, so what's happening on gold? As you know, whenever there are some geopolitical issues, gold can do well. And because of these new escalations and tensions between Russia and Ukraine, what we have seen, gold has seen a pretty nice and strong rebound. And we were expecting and we were looking for this rebound because we identified a completion of this first wave A. But keep in mind that despite this very nice push to the upside here, we are most likely still in the middle of this black wave 4 consolidation. So I think that this wave 4 is still ongoing and it's still incomplete. Now, what you have to realize that wave 4 sometimes can be deep, sometimes can be sideways, sometimes can be complex, sometimes can be simple. So there are different patterns, corrective patterns that can occur in this wave 4. But it's very important just to be aware of that there can be different formations. And even if I think that we are in a wave B, well, we can move very close back to these previous swing highs before we see this wave C to the downside. In irregular formation or expanded flats, there can be a wave B that will move even beyond these highs before market comes to the downside. But what's interesting regarding short-term structure is that this rise here on the 4-hour time frame, okay, from that low, which by the way, as you know, has found the support here. If you look at September, go back to September 18 when Fed cut the rates for the first time in a while. So that was definitely a very key support down here. What's important now? Well, that's an impulse. Okay, so even if I think that we are in a wave B and that there can be limited upside, this wave B should be then structured by 3 legs, right? So I think that that's still only first leg of this ongoing wave B, because wave B is a corrective leg. So that was wave A. You are now seeing a wave B retracement. So I still think that there can be higher swing low, maybe visible in the next 2 weeks or so. So watch out for potential support after this wave B consolidation. Now the first support would be 2,600, but obviously can be a little bit lower as well. If you will watch the 78.6%, this one could also limit the potential weakness. Actually, this whole area can be very interesting for this potential next bounce higher. But as I said, we are still most likely in this higher degree consolidation. So regarding gold for potential trades, I mean, if someone would say where you should invest and keep maybe your investments, I don't think I would say to be in gold. Okay, I definitely think that much better levels for gold are yet to come, and this could be maybe in a few months when we will have wave 4 trading somewhere down here. Okay, because if you look at silver, you can actually see that silver is also much weaker with this rebound compared to gold. So it just tells me that we are in this corrective phase, okay, and that maybe there can be some new inflows on gold because of these tensions, not that much into silver. But if there will be some new news that will hit the market, this sentiment can definitely change, and silver could be very quickly much lower. So I think that even gold would stay sideways in such case. And what I'm seeing here is a completed ending diagonal. We are seeing a pretty nice and strong drop. I think that's an impulse, and that more weakness should be seen after a bounce. If we get $32, that would be ideal resistance here for silver, so watch out for potential next and further sell-off. So that's for metals. Now by the way, if you are first time visitor here, make sure to subscribe to our channel here on YouTube. Please press like to support us so that we will be higher listed this YouTube list based on algorithm. And if you're interested in more of the analysis that we cover on a daily basis, make sure to check wavetraders.com. Now let's take a look on cryptocurrencies. So cryptocurrencies, as you know, are seeing some very nice push to the upside. So looks like everything is great, everything is fine. We are going to 200,000, 500,000 whatsoever. But still, the important is to be realistic and just keep in mind and be aware what has happened after each bull run. Okay, it doesn't mean that we will see this top formation on cryptocurrencies in today, next week, or next month, but it's very important just to realize in which phase of the stage we are currently in. So if you are holding your cryptos in for portfolio for the last year or 2 years, or maybe even just for the last month or so, keep in mind that there may not be a bad idea maybe to book some and let the market do the rest. Okay, because certainly there will be some shakeouts, there will be some big reversals, and I'm sure you don't want to be too late in this game. So regarding cryptocurrencies, we've been saying that till 2025, till mid of that year, there's a chance that this bull run will continue. And so this bull run is not only now in November, it's been here since 2 years. Okay, 2 years back. So keep in mind that we could be here moving higher into the fifth wave. And we just updated these charts today, and we are seeing the fifth wave. Of course, some extensions to the upside are still possible towards 100,000 or so, but keep in mind that if you are holding these coins for more than a year now, that we could be now running into this fifth wave, final leg of the higher degree trends. And keep in mind that, as I said, there will be always news, good news, positive news, a lot of optimism going on at the end of the cycles. Okay, even if Trump will say that they will have their reserves, US reserves in Bitcoin, yes, everything will just look so great that maybe market will do completely opposite after FOMO. Okay, there you can see some very strong push to the upside, but then market completely reverse this move. And what will happen if market, from any reason, after they really, let's say that they announce that they will put Bitcoin in their reserves, and then suddenly market will make a very strong reversal, well, this would be very dangerous for cryptos in general, because there will be then some news that they are making a wrong decision and that they should be selling their reserves, and this will be a complete opposite, very risky situation for cryptos. I'm not saying that this will happen, but just keep in mind that there will be some news that will, and some new events that will potentially limit the upside. Not sure at which price this will happen, but if you're making money right now, well, just keep in mind that maybe it's not a bad idea to book some on the way up. Now, if we look maybe on, before we go to some smaller time frames on Bitcoin, if we look here on total market cap, keep in mind that we are also here seeing these 5 waves up. Okay, so we are expecting some consolidation. Maybe in December we could see some pullbacks before we see further gains here to complete the whole Elliott wave cycles. But what maybe is interesting, that we are seeing that Bitcoin dominance is actually trying to come to the downside. So maybe Bitcoin is now because it's really looks sideways here around 100,000. I just think that maybe there are some new transactions from Bitcoin to other coins, not necessarily to fiat, and that's why you're seeing some explosive moves, sometimes on Ethereum, then on Ripple, then on some other coins, and this can still be the case in the next few weeks. So there can be an alt season going on, and there still will be some very interesting setups, I believe, on the, within this cycle, with the potential very nice Elliott wave patterns that will definitely keep our members updated on this page. Now, when it comes to some intraday smaller time frame cycle here, as I said, maybe 100,000 is a very interesting potential resistance here, definitely to psychological levels. So that's why we are just keep moving back and forth at these levels, but just be aware of this waveform. Maybe we get another push to the upside, spike above 100,000, everyone would be satisfied and happy, and then you get this reversal back to the downside. So if you see a dip, I think that the support levels that should hold for this uptrend to stay in play is 85,000 to 90,000. That's the area that where you should where you want to see limited weakness if this pullback would really occur. Now, if we look here at liquidations heat map, nothing really special here. Okay, we don't have a lot of big orders on either of the side here. So, but this will certainly change if we start breaking higher here. But what's interesting is maybe on exchange outflows. If you look at spot exchanges, we are seeing that obviously exchange outflows here are increasing, which is normal because everyone thinks that Bitcoin will move even higher and they want to keep their Bitcoins in private wallets. But then if you will just realize that what could this mean regarding the sentiment and optimism, this will just optimism going on. If we'll see at some levels printed that maybe even some data that will beat the previous extremes, I just think that this will be a sign that we are in the very late stages. Now, if you will look some on the leveraged exchanges here, you can actually see that we have some interesting data here, interesting reading, which actually is the highest for in 2024 actually. So not sure what this will cause, but definitely there is some interesting actions going on regarding futures and options. Now, if we take a look on the Ethereum is in a sideways consolidation here, but it may do very well because Ethereum Bitcoin ratio is moving to the downside, and we have seen last week that Ethereum moved to the upside when Bitcoin was still sideways, and we were seeing further upside for a wave D that we are tracking within this triangle. So upper trend line resistance here is a very strong one around 3,800. Not sure this one will be broken that easily, especially if maybe we really are going to see a correction on Bitcoin as well, a deeper one. But after this wave here would show up, I think that there would be still chances to be looking for some opportunities on the Ethereum. But on the short-term charts here, if you look and try to define the Elliott wave pattern from that October 2023 2024, you can see that there is wave 1, wave 2, wave 3, wave 4, and now we could be in the very late stages of a wave 5 right into this resistance zone at the higher upper side of this very big triangle. So these 5 waves up, whenever you have 5 waves movement, just keep in mind that there can be a change in trend. Even if just temporary, there could be some retracement going on. Now, Ripple, as you know, this one has been on fire. We talked about this one last week, and still think that there is a room for more upside. Maybe we are going to see even a retest of these 2021 highs before we see some deeper correction, or maybe we'll just don't see any kind of a deeper correction here. But overall, just what is important is a big picture. This clearly looks like a consolidation that can take us much higher at some point. Okay, of course, it's never easy to get into market at these levels. That's why I'm saying that you should always just keep an eye on potential pullback and be aware of this retracement that can give you much better entries on the way up. So at this stage, I just think that you will have to be very, very patient. Now, Dash is also one that could be very interesting. We are now finally, okay, and we talked about this one as well in the past. Now we are finally coming out of this ending diagonal, breaking decisively out of this wedge. So I think that there is now a chance that this market will stay in the recovery mode, and that some pullbacks in the short term can actually be very interesting opportunities, at least short term, on the upside. Okay, traders, that's what I had on my list for today. It's 45 minutes past. Let me check into this chat box real quick here. Bitcoin is falling down. I just think that Bitcoin, even if we see some pullbacks, will be corrective. There will be some back and forth moves, because market will possibly want to get rid of some of the weak hands before we finally make a very strong break above 100,000. So that's why I said earlier that maybe this wave 4 is something that we should be aware of before we may finally see a very strong rise above 100,000 magic level here. Okay, I covered silver. Someone asked me for Nifty. Let me check if I have Nifty here. Okay, this will be the final market that I will take a look right now. I'm not sure if I have Nifty here, maybe. Okay, I have it here. Okay, so what I see here on Nifty real quick, we have pretty strong and sharp reversal here. So I think that we are stepping into a new correction. Maybe some would say that that's already all of a wave 4, but I definitely, before I want to identify a completed correction, what I want to see is a clear potential free wave structure. So I would be aware of even more weakness before this market may potentially stabilize at the former area of a wave 4. That's where the big support could be found. So maybe in the first half of 2025, that's when we could see a stabilization once again and turn to the upside. So for now, I just think that we are here in this corrective phase. Okay, traders, once again, thank you very much for being here. If you did not yet, please subscribe to our channel. Please press like. Also visit us at wavetraders.com for more of our analysis. So hope to see you again next Monday. Enjoy your day. Bye.